Welcome to ISE's Equity Index Weekly Outlook, a weekly outlook on ISE and other industry indexes, hosted by Patrick Ceresna, a derivative market specialist and investment manager with extensive expertise in options and the broader derivative markets. ISE trades options on more than 15 proprietary sector indexes, as well as broad-based indexes and a variety of licensed benchmarks. ISE continually enhances its trading systems and develops new index options products to provide investors with the best marketplace and investment tools to trade smarter.
Hello and welcome to your ISE Equity Index Outlook for March 29th, 2010. This is Patrick Ceresna. First off, I want to take a look at the S&P 500 using that SPDR exchange traded fund symbol SPY. We marked the focal point up around the 115, 117 area as an area where we thought there would be some strong overhead resistance. This past week brought several attempts for the market to break above that overhead resistance level as there's been some strong follow-through attempts. But at this juncture, we continue to stand by the fact that this market is way overdue for some sort of a corrective pattern on the downside. That does not particularly mean that we think that there's going to be a very strong bearish move. We don't want to anticipate that just yet. First off, we're going to start off by just anticipating some sort of a correction. If we get some sort of a corrective pattern on the downside, we're going to be watching whether that support comes in around that 110 to 113 area on the downside. If there's a quick sell-off down there and the bulls find support quickly and hold that support line and begin a new move, we at that point could look at consider the idea that we're going to see a bullish follow through on the S&P to test even the 120 area on the SPDR, which is about the 1200 level on the S&P cash index. But in the same regards, if the sell-off comes down into this zone very quickly and hard, and all rally attempts are quickly being distributed into, and we see no follow through that by the bulls, then we would start to look at more bearish scenarios where the market may follow through all the way and retest the bottom ranges of those zones around the 103 to 105 area in the downside. But at this stage, we're going to just begin by looking for some sort of a beginning of a corrective pattern. Next year, I want to take a look at the ISE US Regional Banks Index, which is the symbol JLO. We were targeting the measured move on the upside to end somewhere around this 24 to 25 area. There was two attempts last week to break above the 25 zone, which were very quickly distributed on the downside, seeing those shadows on the candlestick formations right up there. At this juncture, again, just like the S&P, we are well overdue for some sort of a throwback corrective pattern. It would be very nice to see this come all the way back down toward the 22.5 to 23 area to unwind this overbought state of the regional banks index. If it gets down there and finds lots of support lines and the bulls hold the line in there, then we could very well see another bullish thrust higher. But again, we'll judge that after the fact. We first are just at this stage looking for there to be some profit-taking cycle that kicks in here. Next year, I want to take a look at the ISE Index, which is a symbol SIN. This is an index of all the casino, tobacco, and distiller companies. We adjusted our focal point slightly to this 109 to 111 area to mark some of those upside overhead resistance zones. But the Sindex is showing some bullish follow through. Really, at this stage, just like the other markets, very overbought. But at this juncture, if there is one or two more bullish days, we can't rule out the possibility of thrusting all the way up into that 113 to 114 area on the upside, but at some stage we're going to see some sort of a corrective pattern kicking in here as well. Next year, I want to take a look at the ISE Home Builders Index, which is a symbol RUF. We identified this 11 to 1120 focal point up above. This zone right over here was where we were looking for the markets to begin a correction last week, and we were targeting a downside zone as low as the $10 area, but as it could end as high as the 1050. We saw just a one very quick start on Monday, the market trading down to the 1040 area, and subsequently reversed, thrusting the markets higher. At this overhead resistance around this 11 to 1120 area should be at least a place where we'll see numerous rejections here, but the measured moves on the upside indicate that we may see even a thrust as high as 1160 area in this move. So we're just going to be watching carefully around this 1120 area, but be a little bit nimble in here, but there may be a little bit of follow through, maybe even another 40 cents. Next year, I want to take a look at the ISE Natural Gas Index, which is a symbol FUM. We were talking about the previous week that we were looking for rejections around this 113, 115 area. Subsequently, when we saw those two reversal candles come right off of that zone, dropping down to about the 106 level, we were saying that those types of strong candles usually will resort to even further follow-through selling. We were saying that it wouldn't surprise us for us to see the natural gas index hit all the way down into that 95, 97 area over a several week period. We're well on our way. We already hit that 100 level, just a few points above that. But back in February, this 100 level acted like quite a bit of a support zone right in here. So it would not surprise us at this stage for us to see early this week some sort of a bounce in this area. But I would be very skeptical about trading an upside bounce here in the natural gas index, as it will probably be met with a new wave of selling at some juncture that will probably still see us testing that 95, 97 area. After such a strong bout of selling, we're going to probably need to see a good basing period for natural gas before it becomes a buying opportunity. Finally, I want to take a look at the ISE Mini FTSE 100 Index, which is a symbol UKX, and our outlook overall on the S&P 500 is not much different than it is for the FTSE. At this juncture, we've seen an upside thrust that's reaching some numerous measured moves, even extended measured moves on the upside. At some stage, again, we're looking for some sort of a corrective pattern to kick in. The one thing we want to talk about is that if in fact the bigger picture weekly chart measured moves finish, there are some upside targets that even push up to the 588 to 592 area on the upside, but we're not necessarily targeting those right now. With the overbought state of the market, it would be very natural for us to first see some sort of corrective pattern, no different than what we're looking for in the S&P to come down. When we do get that correction, what we'll be watching for is whether or not the bulls dig in and hold the line. If they do, and we see no follow-through selling on the from the bears, that will be the springboard from which the bulls will make new launches higher. In the same regards, if the selling intensifies and the bulls have no follow-through on the upside, then we may see a much bigger picture reversal. Before we again see and judge what the circumstances are, we first just want to see the beginning of this corrective pattern start. That was your ISE Equity Index Outlook. Thank you for joining me.
Thank you for participating in this week's session. Please join us again next week. For more information about Patrick Ceresna and to sign up for free index options trade alerts, visit www.optionsource.net. To learn more about ISE index options, visit us at www.ise.com/indexoptions.